Focus. Ideate. Innovate. Enable. Moneycontrol India Fintech Conclave. Connect. Ideate. Innovate.
Moneycontrol's inaugural India Fintech Conclave featured power-packed discussions on burgeoning financial technology or fintech landscape in the country, as it put the spotlight on defining trends to position the sector for transformational growth. The turnout for the event was eye-catching, from Union Minister of State for Entrepreneurship, Skill Development, Electronics and Technology, Rajeev Chandrasekhar, RBI's Executive Director, Ajay Kumar Choudhary, to Zerodha founder and CEO, Nitin Kamath. The MC Fintech Conclave saw discussions on pertinent topics such as digital payments, market regulations, and lots more. Through fireside chats and deep dive panel discussions, Moneycontrol's editors, along with India's top industry leaders, change makers, regulators, and unicorn founders, probed the biggest trends that are reshaping fintech in India. The event was kicked off by the welcome address by Binoy Prabhakar, editor, Moneycontrol, as he shared his thoughts on India's fintech landscape and its story.
Fintech in India is having a moment. In many ways, fintech today is what e-commerce used to be a decade ago. It's seen an explosion in usage, attracted a record funding, and created a number of promising unicorns and soonicorns that are disrupting the ways we pay, lend, borrow, and invest. And the rails powering this revolution, India's digital public infrastructure, be it Aadhaar, UPI, eKYC, DigiLocker, account aggregators, and ONDC, these protocols have become a template for the world to learn from. But as they say, with great power comes great responsibility. While this is truly an inflection point, a tipping point for fintechs, startups ultimately have to pass the smell test with the regulators. We hope to find solutions to safeguard the interests of consumers while at the same time foster innovation and disruption. These are themes that we constantly shine a light on at Moneycontrol, and we hope forums like these will go a long way in charting the future of Indian fintech. Because if any country can become the fintech hub of the world, it is India.
Union Minister of State for Entrepreneurship, Skill Development, Electronics and Technology, Rajeev Chandrasekhar, put forward his thoughts on how India has gone from being a preeminent nation to a deeply eminent nation in using tech to transform people's lives.
It is clearly now being recognized by the world that India has become a preeminent nation, has become the preeminent nation in using technology to transform people's lives, citizens' lives. UPI and the corresponding fintech ecosystem is a component of that vision, component of that goal, has reformed government and governance, ensured financial inclusion, formalization of our economy. And most uniquely, and this story when I repeat, as I travel around the world, is something that amazes people about how a problem that was solved by our Prime Minister, the problem of a long-standing mistrust between government subsidies and government benefits and the citizen, that famously was characterized by a Prime Minister in the late 80s as a system of governance that entailed a cost of 85% when 100 rupees left Delhi, 15 rupees reached the beneficiary's account. That problem that defined India for decades, defined Indian democracy and governance for decades, was sought to be solved by our Prime Minister in 2014-15, and that has spawned, in turn, a fintech ecosystem that is among the fastest, most admired, and clearly the most creative fintech ecosystems in the world. At 87%, India has the highest fintech adoption rate in the world against the global average of 67%, and the fintech ecosystem is a key part of what we see as the digital economy, key part of what the Prime Minister refers to as India's decade, and the digital economy goal of $1 trillion by 2025-26.
Next up, a fireside chat with Ajay Kumar Choudhary, Executive Director, Reserve Bank of India, as he discussed fintech innovation and regulation and creating a fine balance between them.
I just want to pick up some points. I think it's a little over a year since the RBI set up the new fintech department. It was in January 2022. And that's the time when you also took charge as the executive director. So how has been the experience? What's the most challenging part of last year?
Thank you, Dinesh. As I was mentioning about the multiple initiatives taken by regulator, means RBI, to achieve the balance between the innovations and the stability. And one of the, a few of the items what I highlighted is the creating the hackathon series and RBI Innovation Hub. But what I didn't mention, that a department, especially specific to the fintech sector, that was created on 4th of January of 2022, with the specific intention by our governor to foster the innovation while ensuring that stability is not compromised. I must share with you, it's 1 year, 2 months of childhood, actually what we have spent. And it's a wonderful experience because multiple things actually we are handling. One is entire fintech ecosystem, how it is growing exponentially, not in India, globally, and how to develop a framework to ensure that they continue to foster innovation without compromising the stability.
So there is a view in the fintech community as we interact with most of the stakeholders that the RBI has been, reluctant in terms of giving a, freedom to fintechs to grow. On one hand, you say that fintechs need to innovate, but there is a view that as the regulator, you have been slightly, reluctant. You clearly don't want them to get into lending. You don't want fintechs to grow big. So how does the RBI position fintechs? What do you want them to be?
When we talk about a fintech or any tech, this idea is this, to use the tech to improve the efficiency of the finance or that system. When we talk about RegTech, SupTech, FinTech, it's basically tech we are using to improve the efficiency. In case of Fin, is a finance system and services. That particular part, improving the efficiency part, is perfectly fine and welcome. But so if it compromises in any way the stability part, and if compromises on any of the policy objective, I'll underline here again, the policy objective of financial integrity, policy objective of data privacy, policy objective of customer and business conduct, policy objective of cyber security, if any of these objectives are compromised, then regulators have to chip in. At this point of time, fintechs are not regulated.
Correct.
Right. So we are working on the framework how to handle that. We are not talking about regulation. We are talking about a framework which can handle this particular entire ecosystem.
Nitin Kamath, founder and CEO, Zerodha, and Kailash Nath, CTO, Zerodha, went down memory and shared Zerodha's bits to billions journey and how they bootstrapped Zerodha into a profitable unicorn.
Zero is the favorite word at Zerodha. Zero funding, zero debt, zero loss. But how long did it sort of take for you to become profitable, Nitin? And was that always the way you wanted to build a company?
Yeah. No. Firstly, thanks for having us here. Both Kailash and I, first thing we noticed were there were glass bottles. So, thanks for whoever thought of having glass bottles instead of plastic. So, see, when we started the business, there was no big ambitions. We were really thinking building Zerodha as an extension to what we were doing, Nikhil and I as traders back then. And Nikhil continued trading. I thought, I have an opportunity to go build a broking business, and that's how the business started. Actually, the first year of the business was profitable because of Nikhil's trading. In a sense, his trading profits was, in a way, a seed capital for the first 1 or 2 years. But the business became, profitable from operations of sorts. I think from the 3rd year onwards, and so I think see in the journey, I think the reason we are profitable is because we have never spent money acquiring a user, right? And this was a concept I think as a trader I knew this very well, that looking at an advertisement doesn't get you to trade, right? The trigger to get you to trade is more peer induced. I'm trading, I make some money, I tell my friend, oh, I traded. he asked me, where did I trade? I let him know, right? As in, it was more pure induce. And so we said, so spending for advertising didn't make sense, and especially at the low cost at which we were working. If you spend 3, 4, 5,000 rupees acquiring a user, there was absolutely no clarity on how you ever, kind of recover that money. So the stance of not advertising is really what has helped us stay profitable, and which has also meant that it has made it almost like for us, forced upon us that you have to constantly keep doing something different. Because if you want the word of mouth to continue happening, you need to keep doing something different as a business. So that's really how the business has evolved.
At what point did you think that Zerodha is here to stay? The aha moment when you thought you were on to something, that this is not going to fail and I don't have to quit my startup.
Yeah.
Kailash? Yeah. How is Kailash?
No, in the sense, until 2015, we were building on top of vendor products, right? 2015 is when we launched Kite, our in-house web and mobile app. And so when we saw that, when we saw the reception the customers gave, was the aha moment of sorts, and that was really when I thought, there's an opportunity to go kind of, potential for us to become large as a business. I think we both were, on our way to Cochin for one press conference in December of 2015, and we decided, at the airport, I said, we haven't done anything special. People don't look at Zerodha for investing; they look at us only for trading. Why don't we go zero brokerage for equity investing? It took us 2 minutes to decide this, and the next day we announced. So we were kind of at the right place, right time, bunch of times. But the rightest place was 2015, 2016 for 3 reasons. Kite was launched, we went zero brokerage, and then in 2016 you could start onboarding a customer online, completely digitally. So all those 3 things came together, and that was really, I think 2016 was really the aha moment.
The aha moment. Kailash, you've sort of built the tech stack for Zerodha, and I remember the last time we spoke, you said you have 33 members in your tech team, and only 2 of them have left in a decade. So what do you do to retain talent? Because people have had to give all kinds of financial incentives and other incentives to attract and retain talent. What did you do differently?
There's no formula, and I think the key is that we don't really look at people as resources or talent. We don't even use the word talent. That's not our framework. So it's a group of people who hang out with each other, who have the right philosophies, who gel well with each other. There's no pretense. So it's human decency, I guess, and a clear focus on building relationships. There's really no formula.
But, as you scale, is it possible to have that framework, just a bunch of people mingling with each other? Because if I look at Zerodha today, you operate at a different scale, right? I mean, for FY22, some 4,964 crore of revenue, 2,000 crore of profits, and you still have 1,100 employees and 33 in your tech team. So how is it possible to have that when you're scaling so fast as a company?
I think it's a misconception that the number of people in a tech or engineering team scales linearly with the organization in terms of financial transaction or the number of users or revenue. It's absolutely possible for a really small team to build massive systems that scale to really massive numbers. So it's generally a misconception. For me, if an engineering team grows exponentially as the company and its business grows, that is a bit of an anomaly.
Moneycontrol India Fintech Conclave. Connect, ideate, innovate. Moneycontrol India Fintech Conclave. Connect, ideate, innovate.
Next up was Special Fireside Chat with V. Vaidyanathan, MD and CEO, IDFC First Bank, as he shared his thoughts on banking in the digital era.
As the MD and CEO of a bank today, what's your take on the impact the technology is going to have on banking? Because ultimately, every company is going to become a technology company. How much time do you spend on thinking about technology? If you can give us some perspective on that.
It's a very, see the word, since you said what's the role technology will play, let me just say that technology is such a large waterfront. You know, there is 5G, there is IoT, there is AI, ML, there is conversational AI, the hyper-personalization. So just such a large waterfront, it's really difficult to put started. Maybe we'll go in bits and pieces as it goes along. But let me just step back from that. If you think of banking, it's not a product as such. It's not like a mobile phone, it's not a wallet. It's not a product. We call it product, but it's not a product actually. It's not a physical product. It's a service. But even in service, it's not a physical service, like somebody giving you a physiotherapy for a repairing, or a surgeon who's doing, that's also service, but somebody's doing something on you physically. Now, this is service like purely it can take the shape of electronification. That's a very, very important point to note. If you think of savings, for example, you're saving money, money is electronic. You want to invest money, that's electronic, your demat is electronic, and a choice of mutual funds are electronic. You want to take insurance. Now, insurance is a concept, die, somebody pays for you, but it's all electronic. If you think of payments, it's all electronic. So, unlike any other form of product or service, banking is very prone or to be affected by technology, because it's all electronic. It just moves by electrons. So, it's like that. Right. So that's the reason why banking system can immensely latch on to the new emerging ecosystems and plug there and get the move faster with the times.
Right. In fact, since you spoke about ecosystems, let's discuss how these ecosystems have changed in terms of the origination ecosystem, the processing ecosystem. How are you sort of going to leverage that?
Let's take one thing at a time again. Since we said banking is electronic, for the reason I described, it's very touch-free. Let me just say that, let's take origination. So all of us who've been a few years in this industry, we know that just not very long ago, there used to be direct marketing associates who used to go to customers' homes and pick up documentation for giving a loan or so on. Or maybe customers came to the branch and you know how broken the process were. Now it's become, the ecosystem has now become e-mandate for setting a mandate, e-KYC, biometric and all that. Let me say e-KYC through OTP and OKYC, CKYC, etc., CERSA, etc. So our banking system's ability to, let me say, get involved into these new ecosystems has dramatically changed the way banking is done, at least as in the example of origination is concerned.
Final couple of questions. So as the CEO of a bank, and as a CEO, as a leader in the banking industry, which is constantly getting disrupted by technology, what keeps you awake? What's the number one issue that perhaps gives you sleepless nights?
See, we are
I hope you get a good night's sleep, but what keeps you awake?
No, I do get my bank is doing very well, and I do get a sleep. But the thing is that if you ask me, see, we're at a tech conference, and I must say, of course, one of our very significant tasks actually is to build a really good tech platform. How the core systems are, how the middleware will be, how the engineering will be, how will the, let me say, the customer interface channels will be, how the customers will be, and how the whole stack will talk to each other in a seamless way, how different parts of the technology organization will talk to each other, how they'll be seamless, how they'll be working well with each other without friction, etc. These are all roles for a CEO, because if you really don't get the stack right, then there will be friction in the organization. There's enough friction in the customer journey itself, which we have to scratch our head and always get it right. But last thing you want to have friction within the organization. So these are roles for I'd say for at least for me. The other thing which I'm really crazy about is culture. I mean, we believe we're a new bank, and we if you get culture wrong, we'll get it all wrong. From day one, we're thinking culture. If you mess it up, there's a big price to pay.
Dilip Aspe, CEO, NPCI, Harshil Mathur, co-founder and CEO, Razorpay, and Shinjini Kumar, founder and CEO, Salt app, had their say on future payments in India, sustaining the digital payments juggernaut.
UPI, it's been quite a journey, and people cannot stop talking about it. Recently, at an event, Pramod Verma spoke about how it began when you, Pramod Varma and Nandan Nilekani sat in a room and you all had just one problem statement, how to send money like you would send an SMS or email. And this was barely 7-8 years ago. Did you ever think that, we would reach here so fast? We are already crossing 300 million transactions a day.
See, first of all, I would like to say that, we Indians have a habit of celebrating too early. So I don't think UPI has really reached to the potential what it should have, right? So I think it's a journey. Yes, there is some milestone we have covered, but I think for a country like India, we should do 10x from here, right? That's what, and when I say 10x, it's not just a hypothetical number, because when we started thinking about $1 billion a day, it appeared like a hypothetical number, right? But now I think everybody believes that $1 billion a day is just 3x away, right? In that sense. So I believe that, there is a lot more work to be done by everybody, including NPCI, to truly unleash the potential of UPI, which is nothing but a 10x volume from where we are.
So when can we expect 1 billion transactions a day?
So again, we think about this daily, I'm saying I wanted it tomorrow, but I'm saying that, realistically, I think if all of us continue the efforts, it needs investments, right? Because we need to get some more, at least 100 to 200 million users on UPI. We need another 25, 30 million merchants. So both demand and supply multiplier effect will get it there. Some of the use cases like mobility and those kind of things, which are not yet operating on cash, has to come inside. So I believe that 2 to 3 years is a good time period to assume that we'll reach billion a day.
So 1 billion transactions a day by 2025?
I think so. Yeah, I think so.
That's a good headline. Harshal and Shinjini, your thoughts on, what can give UPI thrust, or what can help it sustain the juggernaut, sustain the UPI juggernaut? They've undertaken a whole lot of initiatives, from UPI Lite to credit on UPI to various other things, but if you can give us your perspective.
I think, we are all building a lot of our businesses on back of what Dilip's team does, so a lot of credit to him.
So investment to wahan se mil jayega.
Become billionaire now.
No, so I think UPI is really, while it started as a great thought, I think the constant iterations on UPI is one of the biggest reasons for its success. That constantly NPC has come up with newer and newer features on top of UPI, which has opened up the opportunity far more and far wider. I think the UPI AutoPay, for example, when it was launched, first the mandate part, which completely changed the way IPOs happen in this country, and then the AutoPay part that came in and solved a big problem for subscription payments. And now with UPI Lite and so many more innovations are coming in. I think for fintechs like us, I think sometimes I tell Dilip that it's harder for us to keep pace with the kind of innovations that NPCI comes up with. But I think that is where the amazing part about UPI is the way the platform is built in form of a public-private partnership, right? So NPCI builds the base stack, the private players like us are able to build on top of it and get it to the last mile. I think that collaboration will play the key role in getting it to the next 10x, as Dilip says. I think what we have done so far is that we have solved a lot of problems which are the truly transactional problems, which are the tier 1, tier 2 problems. I think the next phase for UPI is to go to tier 3, tier 4, where it's not just about making the process seamless and simple, but also making people aware on how to use it in low connectivity, poor infrastructure areas, and that's where things like UPI Lite, for example, play a critical role.
Shinjini?
So I think UPI has been a wonderful journey to watch, and one of the things that we need to keep in mind is that 3 things that have given it massive tailwinds. One is that when you build something afresh, it's always much better to drive that than to take an existing
legacy
product or system, legacy, right? So in any case, in this country, we are not very good at restoration. We are very good at building new things. So that was one great thing that happened. The second thing that happened is that there was demonetization. And the third thing that happened was COVID. So a lot of the cash replacement that happened with UPI has got a lot of everything that both of them talked about, and innovative use cases like ASBA and various things that have come out of the NPCI stable, as well as various fintechs. But the net, the factor is that the external ecosystem has also given it a very massive push, okay? Now, if you think about stepping back and taking a BAU, stock of things and say, where do I now focus? Because now I know that this whole room is some shape or form of UPI user, but who is using it for a real problem to be solved? Who is using it despite friction? Who is actually using it once in a year and never coming back to the platform? Then you start to spot the use cases that are likely to take it to that next step. So to your original question was, what's the next step? And in my mind, actually, I a little bit disagree with Herschel. He actually said both things. The bottom of the pyramid, I feel, actually has adapted to that cash replacement much faster in many ways because of obvious reasons. So like, because I have 2 homes in villages, I can tell that I travel without any cash ever, and I think that's a very good ecosystem. But it's actually the reverse, which you also made that statement, where the use cases are very much existent and they are not yet productized at this stage.
That's all for the part 1 of Moneycontrol's India Fintech Conclave. But before we go, here is a quick sneak peek into the part 2.
Moneycontrol India Fintech Conclave. Connect, ideate, innovate. Focus, ideate, innovate, enable.